Good evening all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for Monday. We're at the 9th of August, 2021, just after 6:10 in the evening. So, in looking at the markets, well, you can see AMC up, and I thought their earnings looked fairly decent for them just reopening the theaters and getting foot traffic back in. You'll have to wait a while to just see how it does, but it's not a $60 stock anymore. It's 30, and the question is that a fair value? When we take a look at PAVE, I'm concerned with that. Why? Because the market doesn't have the movement it's had before to the upside due to a reason. Even if the Senate passes its version of the $1 billion infrastructure bill, it's got weeks to go before it gets anywhere into the House, so you got time. So markets, they go, well, it's not coming tomorrow. Maybe I can wait. It might not even come because other things can happen. Just things like that going on. In ARC, you're suddenly into a stall. You can almost see it. Lower highs, higher lows, forming a triangle pattern, if you will. And in that pattern, you've got your higher low, higher high. Be careful. If this market takes out Friday's low of 122.29, you change it, if it doesn't go up first, to lower highs, lower lows. So that would break the uptrend. So I'd be watching that very carefully. If that's broken, I'll look for the market to fall back to support between the 200-day average at 121.69 to the 18. If the market continues to rally from here, the Bollinger Band is right here. What's going to make it just pop and run? It would have to be a piece of news, as I see it, that we don't know at this point in time. So I think the market 2 days ago is where the pros came out of this in a market that's overbought. Overbought, hit the upside target. I think the pros are out. Apple's still drifting. It's not giving you any edges whatsoever. The break low today was 145.52. The last break low was 145.18. If that's taken out, you have no trend. Then you have a higher high, lower low, and I'll look for support at 143.51. If the market can snap here and start clearing 147.79, then I'm going to be looking for wherever the Bollinger Band comes in. It's probably going to be a little bit lower than that, but that's where I would assume it's coming. It's sort of in no man's land right now. Excuse me. Here's PAVE. You lost the embedded reading. When you lose an embedded reading after being embedded, you normally go back to the closest moving average under the market. Often that's the 18-day average in red. I'm wrong in that thinking if you took out the high where I'm pointing right here. So it's got to make a new high for the move. Otherwise, I think the market is trying to pull back there to reassess. In XLI, you have no trend. You have a higher high, lower low, caught in the sideways action, and more caught in the upper half of that trading range than anything. But here too, you had a market that was embedded, lost it, you went back to the 18-day average, and you haven't been able to put anything together. I like the semiconductors, and they've offered the opportunity to take some money out of it since they're embedded. Give this market a good break in the next day or two, and as long as the red line stays over 80, doesn't close under 79, I think you'll see buying come in on breaks in this market, still looking for better prices. PODX. Notice how it just stays oversold. It refuses to get bearish by embedding a pattern like this. When you lost that pattern, you went back to the closest moving average and hung there. You're sort of in no man's land. If you were to take out 1155 and not break through today's low again, you could have higher lows, a higher high, but the upper Bollinger Band's right on top of you. I think it's got more work to do. ESGU, we have a fully embedded reading. You know what that means to me. On pullbacks, I think the pros are buying, looking for the market to go to 102.62. With that red line, close it under a 79. I think they come out of the market. XLE, the energies, bearish, lower high, momentum turning down. lower highs, lower lows, unless and until this market clears Friday's high of 49.90. I think the pros are selling this market, and that, I think, will be their stop area. And if they get stopped out, I think they'll go back to the drawing board. In the emerging market ETF, you got an embedded reading. That's what you wait for. So I think the pros are using these pullbacks to buy. Again, if the red number closes in the last 2 minutes or so of trading, and you see it's under 79 by any reasonable amount, I think they come right out and they go, I'll take another look later. We had a flash crash in the gold market futures last night. Same thing in the silver market too. And what happened is, traders have to understand what happens on major U.S. reports. And they're typically either like a jobs that we had at 7:30 in the morning, or very often it's the Fed announcements at 1 in the afternoon. You've got to think in the afternoon what happens. It's 14 hours later in parts of Asia. And Europe's already closed at that point, right? It's 6 hours later, 5 hours later, depending where you're looking at. So those markets get the yin-yang. People do go out, they get away from their desks. Not everything's computer traded. They come in the mornings and they react in their mornings to what happened. Making matters worse is you get a Friday big number and you're closed for the weekend. So there's pent-up demand. We open Sunday night in the U.S. futures market. It's a Sunday night. The trade is thin. It's always thinner. It's never as big as during the day. Kaboom! Away you go. So you'll get a lot of volume on a flash crash day, but it's not the norm. That's my point. And you get, it's called a flash crash because as fast as it goes down, it snaps back, but it wipes out people in the process. Well, that's what we had. Doesn't mean the trend is over to the downside. Do you want to buy that? If you do, why? I was on BNN, which is Bloomberg TV today in Canada. Did one of the shows with them there. And I was asked that question, well, why wouldn't you want to buy gold? And I said, why would I? The trend is down. I'm looking to get the opposite. I think gold's a short sale. Up right here, where you're getting these crossovers in the moving averages. I don't know if it'll get there, and it's not going to happen tomorrow. There's some gaps in the charts, but why do you want to buy it? It hasn't done a thing for you with this inflation talk. And now that they're talking of raising interest rates, or first, the tapering and then the interest rates, and you think a higher dollar's gold's friend? You do what you think. I don't see the story. And at the end of the day, there should be a story. The gold miners, you've gone from the upper Bollinger Band. Remember when it was here last week and I was telling you, I think the pros got out. And this was August 4th, well before the jobs data. I said, that's the combination. You get key moving averages in a Bollinger Band. I certainly didn't see it going from there down where it went, but that's what it did. Again, it's having the disciplines to follow what you believe works when you're a trader. And that's what I try to stay disciplined on. The hardest thing in trading is staying disciplined. If you find the right things that you believe works, you got to follow them. The market works against you to follow them. It's going to try to scare the hell out of you. It's going to come out with news events. You're going, oh, I don't know what I'm doing. Why am I doing this? But you can also set up rules. Like I tell my traders not to go through major reports. Now, I don't consider SPDRs and ETFs investments. They're trading vehicles. I consider stocks, Amazon, Apple, Tesla. I can go down the whole road. ARK. Those are investments because you're buying company and what they're doing and so on. I can get that. These are trading vehicles and no more than that. In this one, you got a higher high, lower low. What do you do the first time if you hit the 200-day average and the lower Bollinger Band? I don't care what the news is in the morning or how much it looks like interest rates would be going up. I'd be hitting my clients in the ribs just like that. It's time to come out of shorts if you're short. Same thing in FXE. What do you do here? You were just at the upper band. Now you're at the lower band. I don't care. That's what the rules say. My rules. They're not everybody's rules, and people don't like to follow them always. But I'll tell you, if you watch me in the morning when I come out with my SPDR ETF and I review the charts, there's a full game plan. Buy here, sell there, do this. I know I wasn't on YouTube this weekend for your free version. I promise you, my subscribers had their videos of the weekly charts. I did that all. I did them on, I think I did them Friday night. And as I did them Friday, everybody had them. But for the weekend, I took a little bit more time for myself. That's all. Remember, this is free, folks. I don't play games with my subscribers. That's a whole different world. They're paying me money. This is what we cover and more. So I don't care if you're in the other part, looking at PODX, Apple, URA, I got Amazon in there now, or the stock indices, the metal markets. There's something there for everybody. And I'm going to be writing my subscribers, let's review the lists again and see if there's anything new we should be adding, but I will subtract. I only want to keep it at around 40 charts to go. And there's a limit to my time and a limit to your viewing time. So how do you get this? Well, it's so simple. Excuse me there. All you do is, wow, how do you like that? All you do is go to our website, under the word research. You start for the first 30 days. There's no contract. If you don't like it, you quit. You blew $8.95. If you like it, folks, all you need is one good idea from me. I think I'll give them to you. I hope it's only not one. You know, I want it to be a lot more than one, but I think you'll find that I come up with that. And I'll make sense to start your trading day if you're a chartist. If you're not a chartist of any type, this is not for you. Don't waste your time. You're not going to like it. A chartist, salivate, because it's really pretty cool. You can call my staff. They'll explain it. You can go to our website under the word research, give it a sign up. $8.95. You can cancel like that. I'm Ira Epstein. You have a great day.